We've got some market movements to celebrate today on the Uplevel Dairy Podcast. The largest cheese export month for the U.S. ever, the potential for record high butter this year, and an insatiable appetite for milk protein concentrate. However, as you're about to hear, now is not the time to lose laser focus on the future and profitability of your dairy farming business. And you're going to hear it all right here on the Uplevel Dairy Podcast. This is the podcast for dairy farm owners, managers, and advisors who are committed to profitability, sustainability, and excellence. I'm Peggy Coffeen, and it's my mission to bring you the conversations that will uplevel your skill set and your mindset so you can be a top performer in the dairy farming business. And my guest today, Curtis Bosma from HighGround Dairy, is here to help you dig through all of the market reports and give you the cliff notes of what you really need to know in this monthly market update provided by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Information in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed only represent the views of the speaker and not those of HighGround Dairy Trading unless otherwise expressly noted. Today is May 20th, 2024. It's approximately noon Central Time. And Curtis, you're here today to kick us off with the price action report.
Yeah, thanks for having me. Certainly a lot to cover this month. I think the last couple of months that we've been talking about markets, we've been saying that there may be some excitement to come, and that excitement has certainly arrived. When looking at futures prices right now and kind of the action we've seen over the last month, if we look just simply at June 2024 Class 3 futures from where we were back on April 17th through this past Friday, which would be May 17th of 2024, we've increased by $3.91 a hundredweight over that time span. So that is a significant shift in what we're seeing in terms of potential margins and stuff. If we kind of zoom out a little bit, looking at Class 3 futures for the third quarter of 2024, we're currently sitting right around a 2077 average. That is $1.91 higher than it was a month ago. For Q4 at 1928, which is 97 cents higher than it was a month ago. And then for Q1 of 2025, we haven't seen much price action out in the 2025, but we are sitting at 1842, which is up 38 cents. On the Class 4 side of things, for Q3 of 2024, we're at 2142, which is up 74 cents versus last month. Q4, we're at 2191, which is up 50 cents. And then out into Q1 of 2025, we're at 2065, which is up 38 cents versus the last month. Shifting over to the corn and soybean meal side of things on the old crop, so that would be the July 2024 contract right now. We have seen a little bit of strength there. I know there's been some concerns about delays in planting and some other trade issues and other things going on in South America. So we've seen those drift higher as well. So old crop for corn, we're sitting just over $4.50 a bushel there, so $4.52 and a half. That is up a little over 11 cents from where we were last month. On the new crop, we're at $4.76 and a half there. That's up almost 12 cents from where we were. On the meal side of things, old crop meal, we're at $3.68, which is up 29 bucks a ton there. And on the new crop, we're at $3.66, which is up 22 and a half bucks a ton. So seeing some strength on obviously the milk side of things, but seeing a little bit of things drift higher as well on the feed cost side.
So Curtis, you've just given us an update on what's been going on in the markets. And as you said, some positive things going on in dairy for sure. But break that out and give us a little bit of the behind the scenes as you dig into what's really going on in these different market sectors and what's causing this movement.
Yeah, so a lot to unpack here over the last month. If we kind of start at the milk level of things in terms of milk production, zooming out globally, the last complete month of data that we have goes back to February of this year. That marks the 8th consecutive month where the top 5 milk producing regions around the world have reported year over year losses in milk production. So the February number, we're down 0.6% year over year. This has certainly been kind of setting the stage and setting the tone for what we're seeing in the markets globally. If we zoom in on what we're seeing here in the US, we've had 9 months of reported year over year declines in milk production, and here at about a little over an hour and a half, we're going to see another month's worth of milk production there. A lot of these recent headlines of the H5N1 have really kind of stolen the show in terms of what our expectations are for milk production. We've already kind of had the expectation that milk yields were going to be potentially declining with the tight heifer and replacement inventory situation. We've been seeing the slaughter numbers on a weekly basis that have been coming in at very low levels, meaning that a lot of dairies right now have been just ratcheting their cull rates lower and lower, keeping older animals in the herd, which is kind of hurting that milk per cow yield on an overall production basis per cow. But that's even being more exacerbated with what we're seeing from potential herds that have been infected. We saw it in the data from the state of Texas with kind of the initial outbreak from the March data. We're going to get the April data here in a little bit, and we can likely see that coming into play in some of the other states where cases have been reported as well. Looking specifically at the cheese market, which has been obviously the largest driver behind all this price action that we've seen in the Class 3 space here, the big thing to call out here has been, where has this cheese been going? A lot of this cheese has been committed to exports, and that's why we've been seeing a lot of this upward price momentum. We've been kind of saying this for a little while, that when you looked at the U.S. cheese market over the last 2-3 months, we were discounted to the rest of the world. So there was an export opportunity that was there, and the importers showed up for it. So in March of 2024, we actually had the largest cheese exporting month ever for the U.S. So we moved a lot off our balance sheet and into some of those importing countries. And specifically, the most important part of that is it wasn't that we were just exporting, specialty varieties. We actually saw a significant export of cheddar cheese, which is ultimately the commodity style cheese that we price everything off of here in the U.S. I think another thing to note is when prices were at those lower levels, so when we were at $1.40, $1.30 cheese, we did see a lot of product mix changes from processors and manufacturers, kind of shifting away from those commodity style cheeses to things that may have a higher return to the processor. So if we look at specifically that cheddar cheese, which is ultimately what we're pricing off of here in the US, for Q1, cheddar volume for production was just over 977 million pounds. Now, if we compare that to where we were in 2023 for Q1 production, that's down almost 7% from where we were last year. So we saw a lot of the cheese shifting to other varieties that may potentially yield a higher return, which has really tightened up those supplies. And if we're talking specifically about the CME spot market, which is our daily sort of cash market where we're doing a lot of the price discovery in this marketplace, that cheese, that speck of cheese that is sold there has to be between 4 and 30 days old. So if there is not fresh cheese available that is the right spec, because of export commitments, because of lack of production in those certain specs, because of the different shifts that have happened to product mix, these are the types of explosions, and you could even call it an overcorrection to the upside, that'll happen in a vacuum of a market like that. Another thing that's kind of notable from the cheese and Class 3 side of things, if you look at the Commitment of Traders report, which is a report that gets released that shows kind of the positioning of large money managers in different agricultural futures contracts, you could see that there was a pretty large managed money short position going into these last couple months for the cheese and Class 3 space. As we've seen some shifts in, we've talked about it with exports and with product mix changes, we've seen a lot of that short position kind of get liquidated. So you see additional buying that kind of is taking place in that market. So that's just another reason that, markets have this tendency of overcorrecting both to the downside and to the upside. And that's kind of brought us into the situation where we've seen this rapid move higher in both Class 3 and cheese futures. Moving over to butter. Butter prices have been trading above $3 per pound at the CME spot market for some time now. This is, I don't want to say surprising, but I would say surprising for this time of year. Right now, fundamentally, this market is still leaning a little bit bearish. There still is some rather large inventories. March ending stocks for butter were at 317 million pounds, which if you exclude 2021 is the largest going back to, I believe, 2000. So still some pretty large inventories out there. We're talking about how milk production in the U.S. has been lower on a gross pounds basis. But when you look at the actual butterfat production in the U.S., it's actually been slightly higher. So I think based on where we're at, we're up about 1.3% year over year for actual just raw butterfat production. With that, we've seen lower cream multiples, which means that churns have been running steady with volumes. But all those things said, there's still a lot of anxiety out there. Last year, we had record high prices at the CME spot market for butter. And this year, I think a lot of buyers are looking at this and saying, hey, if there's a potential that this market's going to get to record highs once again, because something may happen with milk supply or something like that, we want to make sure that we at least have our inventories secure, because the replaceability of butter is not what it used to be. It used to be people would trade into different edible oils or other things like that. But now with shifts in consumer trends, butter is butter and everybody likes butter. So you can't shift away from that. So there's a lot less price sensitivity from the buy side of that community. And then lastly, kind of looking at, the milk powder. So both dry whey and non-fat dry milk, which are two of the core of the four commodities that make up majority of milk prices. There has been this insatiable demand for high protein milk powders, which has caused a lot of manufacturers to kind of look at some different product mix shifts there. So we've started to see over the last couple of months that the MPC or milk protein concentrate has started to pick up in terms of its production, which is taken away from the non-fat dry milk and production. And non-fat dry milk is kind of the core there. The MPCs are priced off of a multiple of that. So as we see more of those processors seeking a higher return from NPCs and other things in that space, from skim solids perspective, less skim solids make their way into that commodity non-fat dry milk or skim milk powder production, which keeps both production and inventories tight for some of those key milk powders that make up our milk prices here. So with the way that current balance sheet is looking for non-fat dry milk in the US, if we are to see significant demand, we're in a bit more of a fragile state where prices could really kind of move up to the upside. Now, we're not necessarily seeing that demand quite yet, but yeah, like I said, if you look at the balance sheet of where we're sitting today, the stage is set for some potential fireworks later on this year on the non-fat dry milk and specifically class 4 side of things.
Well, Curtis, you just shared with us some of the movements going on in the market and what's behind those scenes. And as we wrap up our conversation today, you're always great at taking all of these pieces, putting it together, and really posing a question that makes dairy producers think about their business and about how they're positioning themselves to manage risk and to be sustainable and profitable in the future. So, Curtis, what's the big question on your mind that you'd like to share with us today?
This month is, does financial volatility impact your decision-making process? Are the highs and lows of these dairy margins disrupting your underlying business plan? I think we see it a lot with the volatility of this industry, where prices can go from sky high to rock bottom very, very quickly. And with all that volatility that's happening in our space, is it compromising our decision-making process? And we've kind of had a lot of conversations here recently with dairy producers that have gone from a point in 2023 where the margin outlook was not great and people were approaching their business very defensively. Whereas now things have changed and there's kind of this sense of invincibility where people think, hey, this is going to be great. We're going to see $30 milk by the end of this year. Well, that kind of elation is great. And I'm glad that people are excited to get up every day and get out there and make stuff happen around the farm. At the end of the day here, we look at the cheese market as an example. $1.40 cheese and $2.10 cheese both cause pain, but they just cause it to different ends of the supply chain. So when we're at $1.40 cheese, it's really tough to go out there and make sure everything's running as it should on the dairy, and those emotions are not fun to navigate. But on the other side of things, at $2.10 cheese, yeah, it's great. We're in a position where profitability is there, and it's a really fun time to be in the business. But if you look at it from the consumer side and from the manufacturer side, it's difficult for them to make sales if they're building inventories with higher priced products. Those sorts of things cause a lot of heartburn down the road, which can potentially destroy demand and things like that. So that's where we kind of encourage people to say, hey, we have to make sure that regardless of what the current conditions are in the market, we still have the same goals. And those goals are managing your financial outcome. I would way rather have a known profitable financial outcome than a functioning crystal ball that'll tell me exactly how high cheese prices are going to get by the end of this year. We always kind of tell people our top priority is your bottom line. So if we're trying to prove ourselves right or wrong of how high class 3 or cheese prices are going to get, it's kind of a waste of effort. But right now we're being dealt a hand that is very good, and it's time to kind of take a look at taking some action here. We're not saying like, go out and sell everything and lock it down today. We're saying put together a plan. Make sure that what we're doing allows for some flexibility given the fundamentals of what's going on out there. But if we have an opportunity to secure some profitability, we should be doing that.
And Curtis, I know you've shared when you've been on Up-Level Dairy podcast before that when you got into this business and when you really entered your career into the dairy industry, it was at some of the lowest points in the recent history of dairy, 2009, right? What have you seen the most successful dairies do to position themselves during these times of elation so that, as you said, when things swing back around, they didn't waste a day in planning ahead and preparing for their financial success in the future?
It's not complicated. The most successful dairies are proactive and consistent in how they approach these things. I think a lot of people think the good will equal the bad in the end, and over a 10-year average, if I do nothing versus if I have a robust risk management plan, that I'm going to end up in the same location either way. But I would challenge that to say that's not true, because if you look at a lot of the dairies that have been expanding and making large investments, they're typically doing so at a time where their purchasing power has been increased because they were able to manage cash flows on farm and proactively lock in margins so that when they have the opportunity to do stuff, there's others that aren't kind of in line. When we have $7 corn, all sorts of farm ground becomes very expensive. But those that have hedged that when we're at $3 corn seem to have the cash to acquire more land and expand their business.
So it's never taking your foot off the gas on planning for the future is what I'm hearing from you.
All gas, no brakes.
And that is the big question that we've been talking about. And that question was, does financial volatility impact your business making process? And do the highs and lows of dairy margins disrupt your business plan? So, Curtis, thank you for jumping on with us once again today for this monthly market update for the month of May. And you have some exciting things coming up on the calendar with HighGround Dairy. What's going on in June?
Yeah, so middle of June, which is typically a really good time to be in Chicago, much better than January or February. We are hosting the Global Dairy Market Outlook Conference. So that'll be June 18 to 20. I think we really do something that's interesting in this conference compared to a lot of other dairy conferences that are out there, and that we try to bring the entire kind of supply chain together. Because if you go to a dairy producer conference, there's a lot of people there trying to push whatever medicine or protocol or something to increase efficiency on your dairy farm, which are all important things to pay attention to. But it's really rare that you get to sit down and have actual conversations with people on the other side of the supply chain to kind of get to know what they're thinking in these markets. And especially when we're having a really fun, volatile time like we're having right now, I think it's valuable to be having those conversations and understanding kind of how everybody looks at these markets.
We'll make sure that we include a link to that as well in the show notes, as well as some details on this monthly market update from HighGround Dairy. Thank you for joining us, Curtis, for this monthly market update from HighGround Dairy for the month of May. And for those of you that are looking for more information, would like to reach out to Curtis and HighGround Dairy, or would like their monthly market report, make sure to check the link in our show notes. And thank you for joining us on the Up-Level Dairy podcast. This episode is sponsored by HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. And hey, if you enjoy this monthly market update and others here on the Up-Level Dairy podcast, please let me know. Take a moment to leave a review and also a rating. That helps us keep this show going and growing. I'm Peggy Coffeen, and thank you for listening to the Up-Level Dairy podcast.